Hi there, welcome to a special episode of Big Deal Today, where we have the top India team of EQT right here in our studios. Let me welcome on the show Jimmy, Hari, Piyush and Ashish right here in the studio. Gentlemen, so good to have you in CNBC TV18. Now my first question, Jimmy, of course, last year was a great year for EQT in India with a large exit on the stock exchanges of Coforge. That's a big milestone. What's your focus now in India, and are you more optimistic for this particular year's investments than the last year?
So thank you, Nisha, and thanks for having us on the show. So to answer your question, I think we're a very thematic investor. By that, we mean we look for companies with, or look at particular trends and then look for companies that exhibit those trends. And you know, those typically result in companies with strong underlying growth and much lower downside risk to the business. In terms of our focus in India, it continues to be the same. We've been very optimistic on India. In fact, since 2013, we were actually the largest PE investor in India, and we've never looked back since then. And over the years, if you look at our funds, Fund 6, Fund 7, and Fund 8, there's been incremental exposure to India.
Right.
Today, in Fund 8, we've committed capital to 9 deals in the fund. It's $11.2 billion fund, of which 4 of those deals are in India, and represents about a little more than 40% of capital committed.
Right. So that's a huge number. Are you increasing the pace for India?
Sure. No. So let's take a step back. I'd say, first of all, the way we evaluate investments as a firm, we run a Pan-Asia program.
Yes.
And each deal is evaluated bottoms up on its own merits.
Yes.
So we remain very optimistic on India, but like I said, 4 of the 9 deals in the firm are India. We expect to continue the same pace for now.
All right. So while you have your choice sectors, and we'll come to all of them one by one, but Ashish, financial services space is where I have seen your firm being very active in almost all the transactions. You did a big one also on HDFC Credila. What is your focus when it comes to the overall financial services space? There are many pockets to it. What for this year is a good theme for you for investment?
Yeah, thanks, Nisha. So we will remain focused on 2 or 3 parts of financial services. One of them is affordable housing.
Right.
Other is financing micro and small enterprises. And third is wealth management. We will remain focused on valuation as well as making sure that the diligence checks out.
Right. And banks, you are already present in one of the banks, RBL Bank. But is that an area you think is an area of growth for EQT, for Indian banks? Is that a place you want to be more involved in?
We would expect banking sector to do well, but given our thematic buyout focus, I would expect us more likely than not to be more focused on the buyout opportunities in affordable housing and micro and small enterprises, as well as wealth management. Banking sector by regulation doesn't open itself well for controlled investing.
Yeah, definitely there are restrictions. Now, Hari, big year for you last year with Coforge transaction, big exit there, and especially with the history that we saw in terms of the strategic sale for Hexaware that you tried to do, and the equity market wasn't ready for the block deals exit at that time. How far have we come as an Indian public market, and what is the confidence that private equity players like yourself have about the Indian public market?
So thank you, Nisha. So yes, the Coforge exit was a milestone for us. I would say Coforge is is an investment that we made in 2019, and we're very proud of what we have done with Coforge. The company has doubled in size in the past 4 years, and over that time, we had a 70% stake in the business, and we managed to bring it down to 26 and did a single-day block of about 924 million. That really speaks to the depth of the Indian market, and we are very encouraged by the liquidity demand. And we're also happy with how the company has continued to perform even after we've exited. From EQT, we've always focused on exit. Like you said, 2021 was a big year for us with the Hexaware exit. 2022, we had Citius exit. So as fiduciaries, we focus on exits, and the depth of the market really helped us achieve that in Coforge. So we're really excited and really pleased with how it's shaped up.
Not just the depth, even the valuation played a very big role in the exits for the entire private equity community. worth $15 billion of blocks really took place in Indian markets in the last year, which has been like quite path-breaking, and I'm sure that will really continue. In fact, even today we are seeing that. Now, Piyush, coming to you, of course, we spoke about the private equity, but infrastructure. You have a very differentiated offering when it comes to infrastructure. What are you doing in India? And you have two different platforms for it also.
Sure.
So how big is the scale and size now?
Sure. No, thanks, Nisha. I think just to correct, I guess infrastructure for us more value add growth.
Yes.
So it's not the typical yield investing that you see. A lot of our peers do in India. So we're looking at to grow businesses and transform them to a great degree. And I think in that respect, we usually focus on 4 sectors: digital, energy, environment, transportation, logistics, and social infrastructure. In India, we have 2 platforms right now. One in the energy space called O2 Power. It's a partnership with Temasek that we set up from scratch 4 years ago. And that's focused on looking at solar, wind, hybrid, battery solutions, serving utility and serving corporate clients, large corporate clients. The other one is through a portfolio company of ours that we own out of the US called EdgeConneX.
Yes.
EdgeConneX has partnered as part of its growth strategy into Asia, partnered with Adani Group, and is looking to build ground up, serving hyperscalers, global cloud players in India.
Right. So when we talk about data centers, how much is the potential for growth? We are still very fragmented and very small in this.
Yes, I think the potential is just starting. We talk about generative AI. You talk about everything that's happening around the world. So I think the amount of data usage and the pandemic was an example of how fast data consumption grew and has stayed at that level. So it's continuing to grow. In addition to that, as we have more data localization laws come in, both in India and anywhere else, the need to have these services and these cloud stores, data stored in domestic markets is super important. We actually see a long pathway and runway for this, and we're just starting from our perspective.
Right. And you're in very interesting spaces, and it's the global pool of capital that you can leverage on. We'll talk more about that. But Jimmy, in terms of the strategy as well as offerings, you have 2 very important areas that are covered. When we talk about the sectoral play, which sector do you think is going to be a more active and interesting sector for this year? All of them are sector specialists, so we'll talk about each one of them. But according to you, what is really looking like the potential areas?
So again, for us, we are bottoms-up investors, and the 5 sectors that we've been focused on as a team and as an office are tech services, healthcare, pharma, financial services, and industrial tech. I'd say, it's all these opportunities are cyclical, but we're seeing equal number of opportunities in each one of those areas as a team and as an office.
Right.
So it's very hard for me to pinpoint which way it's going to go, but just in terms of deal size and capital deployment, I'd say, our expectation is we'll probably deploy another $5 billion in the next 3 or 4 years, maybe even more. So far, we've done $2 billion in the last 10 months. So I'd say, and those 2 are one in financial services and one in healthcare services.
Yeah, both big checks. Bold, bets that you made on both of them. And you're saying $5 billion in next 3 years is what you're going to invest in India.
That's the expectation. Again, it all depends on the opportunity, but that's sort of the expectation.
All right. So as per the growth potential right now and the strategy right now, that could be a possibility that you're looking at.
Yes.
What are the key drivers for India in your view? What is it that is working at this point?
Sure. So I'd say 2 or 3 things. I'd say, first of all, a lot of the structural policy changes the government has made has really sort of unlocked India's potential. I'd say, implementation of GST, investment in the digital stack, like UPI, Aadhaar, the bankruptcy and insolvency code. A lot of these things have sort of just unlocked the potential for India, and we sort of see the market booming and growing. And that's sort of enabled the emerging middle class to keep looking for services like healthcare services or education services, and we're sort of seeing a lot of those opportunities come up.
Right. So lots of opportunities in many areas of investment. But, you're under your choiced investments, and sectors of investment, there's certain areas where we haven't seen as much interest so far. So we'll probably pick your brains on all of that when we return after a very short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal, and we have the entire top team of EQT India right here in the studios. Now, Hari, we were discussing about the kind of success that your firm has had in the IT services investment in the country. Now, with so much technological advancement, and now AI has become a household name since last year, how do you see the IT services, pure play, and the real OGs in this particular sector in terms of their growth potential? Do you think that they are still meaningful investments for private equity?
Thanks, Nisha. So if you take a step back, the overall tech services industry is estimated at 1.5 trillion. Okay, our largest tech services company from India is probably shy of 30 billion. Okay, so there's still a long runway for India IT services. And we believe that there are so many avenues for growth in terms of just the things that are happening. If I look at a technology like the cloud, for example, it's still only 40% penetrated, even though the workloads have been moving to the cloud for the past 15 years, right? So cloud itself is an opportunity for the next 10 years. And with Gen AI, we've just scratched the surface of the opportunity. So we continue to be very excited about the space. We first made our first investment in tech services was 25 years ago in a company called Infrastru. Okay, so we've been active in the space for 25 years, and we still continue to be excited about the opportunity here.
All right, so given your experience in the sector, you still find growth potential in the space. So that's a really good backing for the IT services sector in the country. Now, Ashish, industrials, that is one area, and manufacturing in the country, which is really in the need of capital, which is capital intensive, but private equity has generally shied away from this space. Now with the growth potential, I am starting to hear some private equity players showing interest in this. Now, this is an area of your interest. Do you think you'll start making investments, and which are the themes that you look at?
Sure, you're absolutely right that industrials is increasingly becoming important for India. Given what we are seeing by way of Make in India and need for more robust and diverse supply chains, we are seeing emergence of control opportunities, which has been our focus. So going forward, you would see us being more active there and trying to develop opportunities of scale in that segment. They will be probably around export-oriented industrials and maybe services around the industrials market itself.
Does China plus one aspect really rev up India's chances on this?
We believe so. We are seeing anecdotal evidence of increasing demand moving, or incremental demand moving to India. Which, given India's modest current base, is a meaningful percentage growth going forward, which is what excites investors like us from a long-term perspective.
Right. I can definitely say that you're not the only one who's interested in this particular space. But consumption is another area where a lot of private equity players have been a little disappointed. Given our demographic advantage, consumption was a clear choice. What is your sense? And do you think there are pockets of investment where you can capitalize your investment as well?
Yeah, so if you think about the medium term, the per capita GDP growth will definitely result in changing and improved consumption patterns. We would absolutely want to be taking benefit of that. The way we would probably prefer to do it is more in an indirect manner, whether it is potentially through healthcare services, maybe through financial services, for example, wealth management, or it could also be through some of these manufacturing companies, etc. That is sort of our preference, because we believe that's a better risk-adjusted returns for investors like us.
All right. So still to see in industrials as well as the consumption theme. Now, Jimmy, looking at all these sectors and the choice of sectors that you have, but one theme is really common is the difference between the public and the private valuation. Is that becoming a challenge? And what else do you see on the ground which could spoil the party? Because so far we've been just talking about the good stuff.
No, absolutely. So I'd say from a public or a private valuation perspective, there's always a gap. I'd say the gap is closing, and it's always a challenge when you're trying to get a transaction done or a deal done. I mean, I think the way we sort of do that is, we try and use a value creation playbook and underwrite higher growth or margin improvements. I mean, most of the business, all the businesses we invest in are high growth businesses. So that's sort of the way we overcome the valuation mismatches, if you will. In terms of what we see in the country, I'd say from a GDP growth perspective, things are looking really good. If we look at all the underlying businesses we own, whether it's in financial services, in healthcare services, all the domestic businesses are actually exhibiting very high rates of growth. So at least for now, we feel very optimistic on the country and the economy.
Right, so very optimistic and very bullish. I have a counter question to that. I'll come to you on that. But Hari, pharma again, like financial services, there's so many pockets of available potential growth. Even in the healthcare space, we have seen that. Hospitals actually churned out the maximum number of deals, and that carries forward for this year as well. So there's enough traction in this particular space. But what about pharma? A large transaction didn't go anywhere. But do you think pharma again in India still has potential? What's your view on that?
Yes, absolutely. I think pharma again is a very unique sector. Of the total size of the pharma market, estimated at 45 to 50 billion, half is domestic, half is international. So India has so much talent in terms of chemistry skills, in terms of manufacturing, et cetera, that can supply global supply chains as well as a great domestic market. So there's opportunity in both. And we are seeing early signs of buyout activity in that pharma space over the past 4 years. So we are optimistic that pharma will do well within India, and we are positioning ourselves well for that. I would say we thought about pharma, tech services, financial services, et cetera, and we found this thematic approach more than 10, 12 years ago. So if something doesn't happen for 6 months, doesn't shake our conviction, we continue to believe in these sectors that we have picked, and we're building our base along.
Right, and also you look at value buyouts and those opportunities where you can get a control because of succession issue or other such issues. That becomes a very big opportunity, which India has presented in some form. But Piyush, give us more sense about the investment strategy that you have in India in terms of overhauling some of the infrastructure businesses here. What is the kind of potential that you see? Because there are many optionalities, but money needs to be made for private equity to really bring in the funds. So, how do you see that particular piece?
I think Jimmy mentioned this. Regulation plays a big part. I think regulation policy making has been extremely positive in sectors. Right. All the thematic sectors we just talked about, industrial tech as an example, as Ashish mentioned, supply chain when you talk about it. The reality is for it to work well, yes, for us to be, whether it's alternative China +1 or whether it's however we look at it, the reality is that the supply chain, the logistics, the transportation side of the country needs to improve, right? Right. Bring the cost down from where it is today. Yes. From our perspective, that's a big thematic play to do in India, and be able to transform that from a scale perspective. Right. So it's a fairly fragmented sector, and it requires the capital to be able to overhaul and actually scale it to the potential what we're trying to do across the economy. The second one would be also the same thing would be the energy and environment segment. So we talked about renewables as one, but there is a long way to go when you talk about EV charging, right? That's where the world's headed. If you look at the EV infrastructure we have and how it's rolled out, there's still regulation required significantly to be able to overhaul it and scale it. Yes. Similarly on the waste side, again, you talk about industry, that means more waste creation. So what do we do with that? What do we do about recycling, right? So there is a lot to do and transform business.
Any one pick which you see is with highest potential in India?
I think on the waste side for sure.
Yes, some private equity money has come in from KKR in the past.
Yeah, there have been investments across different sizes of businesses. I think the question is around transformation, right? And it's about value creation.
Right. And final question, we have very little time, Jimmy, but you are more interested in buyout. That has been your strategy in most of the sectors. I have two, live transactions I know about which are kind of co-control. Is that an area of interest for you, or will you be flexible towards that also?
So it certainly is an area of interest, but again, it really depends on who we're going to partner with, right? So there's certain corporates, certain sponsors that we'd consider working co-control on deals, but we are fundamentally a buyout control investor.
Right, but probably the sellers could have more choices with the kind of interest that global private equity is really showing in India. In one word, what's your moat to get the deals then?
Our thematic approach and a sector orientation. I know it's 4 words, but.
Yeah, but the big headline is that you're bullish on India.
Yes.
And thank you so much, gentlemen, Hari, Jimmy, Piyush, Ashish, for joining us here and giving an insight on the strategy of EQT India on Indian investments for this particular year. With that, it's a wrap on this edition of Big Deal, but keep it with CNBC-TV18.